Good evening, everyone. My name is Ollie Green, and I am the Executive Chairman of Brave Bison. We are a new era media and marketing group with offices in London and Singapore, and we currently employ about 150 people. So we like to talk about our business as really having two halves or two pillars. The first half is a network of social media channels that exist primarily on platforms like YouTube, Facebook, and Snapchat. And with these channels, we publish content to those channels. Advertising is inserted into the content, and we generate an advertising commission from that content. So our network is a combination of owned channels that we actually control ourselves, and channels that we manage on behalf of third-party rights holders, big companies, media companies, or sports federations that essentially give us the responsibility of running their channels, and for doing so, we take a commission on any advertising revenue that comes through the channel. The second part of our business, or the second pillar, is very much a fee-based platform. It's essentially an agency where brands and global advertisers come to us for help with everything that is social media related. So we work with global advertisers like New Balance and Vodafone on everything from social media strategy to content production, as well as influencer marketing. 74% of Brave Bison's revenue is generated from contracted or recurring sources, and no one client is responsible for more than 10% of our net revenue. Myself and my brother Theo, who's also on the call, own 22.5% of Brave Bison. We took no salaries in 2020, and we're on quite modest salaries at the moment. So we're very much in the driver's seat. So the board is currently rather small. Myself, Philippa, who is our Chief Financial Officer, myself and Philippa worked together at a previous company. My background is very much digital marketing and media, and so is Philippa's. Philippa worked at IPG, which is a large network agency, as well as one of the most successful independent communications agencies called Albion.
Good evening, everyone. My name is Theo Green, and I'm the Chief Growth Officer at Brave Bison. Prior to Brave Bison, I also worked at Tangent alongside Ollie and Philippa, our CFO. And before that, I spent 3 years working in private equity. I worked at a firm called Brockton Capital. Brockton was a UK-based fund with gross assets of around £6 billion. And also on our board is Matt Law. Matt is our non-exec. Matt has some really outstanding experience running a global agency network. He previously was at a company called Analog Folk, where he was COO. So now that we've given you a little bit of an idea for what we do and who we are, I think it's definitely worth spending a little bit of time on our market. So I think this is something that we spend a lot of time thinking about. And these 4 charts are really the things that underpin Brave Bison and get us excited about the future of the business. Firstly, this chart in the top left-hand side, we see Brave Bison as being really inextricably linked to the future of the digital advertising market. This is a really exciting market. It's a market with a lot of players, but it's also a market that's grown really rapidly in the last 5 years, and most forecasting that it will continue to grow at a similar rate. The market's performed really well during COVID, relatively speaking, and we do think that certainly H2 things responded much better than expected. We do like our macro market, but we also think our micro market is very interesting. Brave Bison and the services that Brave Bison provides are very much pointed in the right direction. So we are a digital-only agency, and we have a real pedigree in social media. But the services that we offer tend to be the services that have the highest growth behind them. So we focus on things like Ollie said, influencer marketing, which is really exploding at the moment, social media management, but also some of the more mature services that have been around for a long time, but are yet still part of big budgets like paid search and SEO. So we like our services business. We think our services business is a good business that's stable and it's on the right trajectory. But we're also very excited about our advertising business. The table in the bottom left-hand side gives you a little bit of information on why. So we have 650 channels, and these channels are heavily weighted towards YouTube, TikTok, and Snapchat. And we're seeing that these platforms really are becoming the dominant medium alongside platforms like Netflix and Amazon Prime for people who want to consume video content. And it's in that video content that our advertising is placed, and the revenue that we then generate. And then finally, just an anecdotal comparison between traditional media and new media. Of course, it's always going to be product and market dependent. Not everything currently can be sold online, although it is definitely going that way. But really, our bet is that CMOs all over the world are going to be shifting their budgets away from traditional channels like TV, like print, like out of home, and into digital channels, the digital channels that we help them execute on. And that's really for three reasons. Firstly, the returns are better, the channels work better. Secondly, the conversions are higher, the return on the ad spend is better. And finally, the attribution. CMOs and marketing budgets are obsessed with where does the money go, what do I get back for it? And that's something that online provides far better than offline.
So we like to go to market with three distinct business units. Our first business unit we term social and influence, and this is where we help brands or advertisers with social media related advertising campaigns. So we work with clients like Panasonic and Vodafone across platforms like TikTok and Facebook, and we'll do everything from consult with brands around which platforms to be on, as well as actually create content for those marketing departments. We have a performance and commerce business unit, which is where we manage media spend on behalf of clients, as well as actually build out technology platforms for our clients. And then we have our media network, which is where we create and run content for our network. As you can see, we work with a range of blue chip clients, and often we have a global remit. So we work with some incredible advertisers like Lego, Universal, and the PGA Tour. So this is a case study for a campaign that we're currently running for Vodafone. Vodafone approached us for help in promoting their youth brand, which is called Voxy. And ultimately, the Voxy's brief to us was, please can you help us to get people to buy SIM cards and start using Voxy. And we did so through influencer marketing, which is basically where we go on to Instagram, we find lots of different personalities with very big followings and very big engagement, and we leverage our relationship with those influencers to promote Voxy. And as you can see there, we generated over 1 million impressions, and the campaign was actually, it's an ongoing campaign for £100,000.
So this is one of our clients also on the services side of the business, so where we generate fee-based income, and this is sort of certainly one of our bigger clients. So this is an EMEA remit. So New Balance is obviously an international trainer company, and here we run almost $10 million worth of advertising spend. So we work with New Balance to place that on different digital advertising channels. We look across 22 EMEA markets. It's in over 5 languages, and New Balance is a really exciting client for us because they're actively growing their direct-to-consumer presence. They want to sell more trainers over their own website as opposed to through retailers, through wholesalers, and through Amazon. So this is the perfect example of an interesting client to us that we would start working with on 1 or 2 service lines, and then start thinking about growing that to be a sort of $1.5 million client over the next few years. This is a bit of an overview of our media business. So as Ollie said, we like to think of having 2 halves. Our first half is where we charge clients for fees. That's probably half our pro forma revenue, so around 15 million pounds. And the other half is this media business. This is where we create content or we license content. we publish it on channels, and advertising is inserted into that content. So this business did around £30 million of revenue last year, and this is where we have some interesting channels in terms of what content we're working with. So some of the content that we'll be publishing will be around sports, will be around culture, will be around entertainment. You can see some of the channels that we own on the right-hand side. We've also managed channels on behalf of big content libraries and rights holders. Typically, we have multiple channels on multiple different platforms. However, we found over the last 2 years, certainly, our biggest platform is certainly YouTube. That is then followed by Snapchat, and that is then followed by Facebook. The other very exciting channels, while something that we think about, like TikTok and Instagram, they're not monetized in the same way. So we don't have the ability to generate revenues from them yet. So that's always less of a focus for us. So like I said, the business model here is very simple. We publish content, people watch it, and they will see an advertisement which generates advertising revenue. That revenue is then shared between the platforms like Facebook, YouTube, or ourselves, as well as our partners. So this is a brief financial summary of Brave Bison, and we are presenting off the back of a rather large acquisition that we made in September. But I think it's important to give you a brief overview of the recent trading history, certainly since Ollie and I came into the business and took executive positions in around the second half of 2019. So these numbers are obviously quite different now because we've significantly increased the size of the business. We've acquired a business called Greenlight. It's a digital advertising and technology company that does around £14 million worth of sales and around £0.8 million of EBITDA. So that will roughly double the size of the business from a revenue perspective and significantly increase earnings on a pro forma basis. So Brave Bison's underlying business has been seeing some good growth over the last 24 months. The last 3 half-year periods have shown good revenue growth as well as decent earnings growth. And we are seeing our cash increase following the restructuring that we made in the second half of 2019. The Greenlight acquisition completed in September, and the businesses have now been fully integrated. We work out of the same office, which obviously gives us an immediate saving on office costs. And we're planning on a full merger between the two businesses in the first half of next year. And as you can see, Brave Bison's cash position has been advancing since the first half of 2020. And when we completed the acquisition of Greenlight in September, we announced that we had a gross cash position of £3.4 million after closing the transaction.
So we thought we would list the 5 reasons why we think you should invest in Brave Bison. I think Theo's gone into the growth story. We certainly feel very aligned with shareholders. As I said earlier, Theo and I took no salaries in 2020. We've taken quite modest salaries in 2021. And we have just invested £1 million of our own money into the Greenlight fundraising. And we've actually been investing in Brave Bison since 2019. It's worth saying that Theo and I are very experienced in digital marketing and media, and we think we have the right sort of profiles to run this kind of business. I'm 29 and Theo's 27. It's very difficult to find a business, especially one that's listed with our sort of business model. Yes, you can find businesses that have a services function and sell time and charge fees, but it's very rare to find one that actually has its own media network attached to it.
So a couple of other things to note certainly is how attractive the income profile is for Brave Bison. That's certainly one of the reasons we got involved and why we chose to invest back in 2019, and certainly why we invested to acquire Greenlight, because that's certainly something that's only got stronger following this acquisition. But on a pro forma basis, 74 to 75% of Brave Bison's income is identified as what we call contracted and recurring, and really that's a client that's under contract for 12 months or more, or that's a media channel that's been producing revenues on a stable basis month on month. And really why we think this is important, both as a public company and any kind of business, is that this gives us the ability to plan for the long term. It gives us the ability to forecast more effectively, and it also allows us to look at debt as a funding option going forward for potential acquisitions. And then finally, I think it is very key for us to be thinking about going where the growth is. Digital advertising is a very exciting market, particularly post-COVID, because brands have really accelerated the change that was going on before. And like we talked about before, they've moved their budgets away from those traditional channels into new, more effective forms of digital media already, but there's still quite a large amount of that market to go.
So this diagram really depicts our vision for the future. On the left, you have a range of digital capabilities, some of which we have inside our current business, and some of which we actually recently acquired through the acquisition of Greenlight. And you've got capabilities like conversion rate optimization, which is where we help e-commerce companies improve the conversion rate on their website. You have things like Amazon marketing, you have content production, you have paid media, and you have influencer marketing, which we're extremely bullish on the moment. And then on the right-hand side, you have a media network that is made up of digital and social media channels. And you can see that we have an existing network of YouTube channels and Snapchat shows, but moving forward, we're also keen to get into things like more Facebook audiences and TikTok audiences.
So just a quick note to the shareholder register. We think Brave Bison is attracting some interesting names. Besides from Ollie and myself, who own around 22% of the business, we've brought in some new institutional investors. Lombard Odier, CIP Merchant Capital, and Trium Capital all joined after we did, and all of whom invested in the recent funding round. Not shown here are a couple of the smaller investors of note, Risk Capital Partners, which is the investment vehicle for Luke Johnson, as well as small cap specialist Premier Mighton. We think acquisitions is an important part of the business plan, and therefore having the institutional support to do that and to be able to fulfill that business plan is key. So we certainly feel that after Greenlight, we're in a good position to go forward. We're now going to open up for questions, so I'll end the screen share.
We've had a good number of questions around acquisitions, and I was just going to start off then. How was the Greenlight acquisition financed?
So the Greenlight acquisition was financed through a £6.2 million placing. We raised that from the institutions that we outlined, and we paid that in cash up front with a very small element of shares going to the vendor. On balance, I think typically we looked at multiple different structures, and we've looked at earnouts, we've looked at using share considerations, but in this instance, we felt that this was the best thing to be doing.
Question about retail participation in fundraising, and would you envisage retail the opportunity for retail participation in future fundraising? Should they occur?
Yeah, I mean, we've seen platforms like Primary Bid come up, which are very interesting. I think the trouble is when you're paying cash for something, you don't have any certainty on Primary Bid that the placing will be taken up. So obviously, from the vendor's perspective, it's very difficult to put the two together. I think what we see happening going forward is perhaps the more traditional route of share placings to new investors, but then a contingent of the fundraising being placed on Primary Bid so that people can participate at the same time.
Next question, would you acquire to add services or scale? What would be the greatest?
I think both is interesting. I think when we look at an acquisition, we look at the management team, we look at the client roster, we look at the territories that the business is operating in, and if it's a business that is more on the media network side, we look at the vertical, we look at the audience, and we also look at the appetite for brand advertisers to want to engage that audience. So there's a few things that we look at. I think scale is important. and in this new sort of very fragmented world within the sort of digital marketing ecosystem, it is important to be able to service clients in different ways, as well as operate out of a number of different territories. And so whilst our UK office and our JPAC operation being Singapore is useful, certainly over the next few years we'd like to open up shop across other markets.
Is there any in particular that you think is most attractive?
I think JPAC is really interesting to us right now. It's a lot less competitive than the UK or Europe. We already have the beginnings of a very successful operation, and so we'd like to scale that. Pre-pandemic, we were looking at Thailand and Japan and Indonesia. So I think that's definitely part of the world that we're excited for moving forward. At the same time, Europe is interesting, and the US is definitely a big opportunity, but I think that would come a little bit later.
The next question verbatim, so I get the correct tone or the correct language. Won't the clients say that your digital services will be biased towards your own digital network offering rather than getting the best available in the market?
We don't think so. We've had one example where we're working with a client across influencer marketing, which is where we use personalities on platforms like Instagram to drive awareness and drive sales for a client. And that same client's been really interested in the sponsorship of one of our content series. So I think what ultimately the client's looking for is an understanding of audience and an expertise around engaging that audience. And so whether that could be through a service that we provide, or it could be through a content series or a content format that we have on one of our networks. So whilst I appreciate in sort of more traditional senses there would have been a conflict, in a sort of digital marketing sense, there actually isn't, because it's all about the audiences that the client or the brand is trying to target.
And next question saying, it's about the demographic of the clients. I guess the comment is is this kind of young people stuff. I think the kind of brands or the services that the target audience that you're reaching, are they mostly younger people, or are you targeting across the spectrum?
It's a real mixture. I think what we've actually found is that yes, there are newer platforms like TikTok where the audience is quite young, but actually over time you find that as these platforms become more mainstream, they really do mature. Instagram has a very good spread. Facebook is actually probably more people over 25 than it is less underneath 25. And I would say particularly on our YouTube network, because we work a lot with sports federations, sometimes quite niche sports federations, we actually have a very big spread. So we run accounts for the PGA Tour and for the US Open, two not particularly youth-focused channels at all. And actually, YouTube is very accessible for all ages. It's a platform that's been around now for over 15 years.
And with those channels, the PGA as an example, the contract length for them, how long have they been in place, and what are the terms?
So contracts can be varying lengths, but typically they start at 2 years. Some of our clients are on 3-year contracts. We work on a rev share. So typically what you find is you're making money for your client, you're making money for yourself. And whilst the contracts do get renegotiated and you have a new bar for success to reach, we're comfortable in the skill of our team and on the momentum of YouTube, which continues to grow year on year. And now, although it's not split out, is certainly one of the biggest streaming platforms in the world.
Time for last couple of questions. This one's talking about the earnings chart, and it says H1 seemed to be smaller than H2. Is there any particular reason for that?
Yeah, we do find there's quite a bit of cyclicality in our earnings from an H1, H2 perspective. Certainly in what we think of as the Brave Bison business. Now that we've acquired Greenlight, which is much more stable, there will be less of that going forward. It'll probably be weighted 45, 55 going forward. but historically, yes, H2 is quite substantially stronger than H1. The main reason for that being that the value of advertising in the second half is obviously a lot higher, because you have more advertisers bidding for the same amount of eyeballs. So the way we track advertising rates through a CPM, a cost per impression, they can be much higher, sometimes double in months like November and December, where you have Black Friday and holiday shopping seasons.
Lovely. And one question finally for me. We had STV, the TV network and digital network, present in the summer, and the presenter spoke about the kind of the pressure on yields on traditional media, and also to some degree on digital as well. Do you see in the social media channels there is pressure on yields, or rates kind of going down, coming up, staying the same? Just talk to that for a moment.
It's not something that I think we'd be able to give a good opinion on. We don't buy any TV. We buy a very small amount of connected TV through streaming platforms through the agency, but it's not something that I could give a decent opinion on.
The question was whether you're seeing the same pressure that they see in digital, from traditional.
I think
are yields in your world similarly under pressure? I think.
So rates do move around depending on which platform you're using, and also which audience you're using. And then, as Theo said, there is a sort of certain seasonality. So things are bought programmatically, and they do vary. But there are always new platforms popping up, and so that's why clients engage us, because we're very good at finding the right audience for the right amount of money.
Lovely. Gentlemen, thank you very much indeed. Thank you, Theo. Thank you, Oli.
Thank you.
Thank you.